Welcome back to Confident Real Estate. I'm your host, JC. Today, we're going to talk about another way to creatively finance your deals. The two biggest factors that prevent people from getting started in investing in real estate are money and risk. More specifically, a lack of money to invest with and the risk of doing a bad deal right off the bat and suddenly finding yourself in a terrible financial situation. But what if I told you there's a way to invest in real estate with little to no money down and almost no risk? Well, there is. It's called the master lease technique. A master lease is really quite simple. Unlike what you may have heard referred to as a net lease, in a master lease scenario, you're not taking on the typical landlord owner expenses like real estate taxes, insurance, utilities, maintenance. You're just leasing the exclusive use of the entire property. Let me explain it. But first, do me a favor, hit the like button because it really helps grow this channel. And if you haven't already, please consider hitting subscribe while you're at it right down below because, again, that helps grow the channel. Thank you. I think running through an example is the best way to illustrate the benefits of a master lease. There are two ways to do this. One way requires a minimum cash investment, and the other way doesn't require a dime. Let's say you come across a rundown triplex with only one unit currently being rented and a landlord who has no more energy for the maintenance and management that a property requires. They're not ready to just admit defeat quite yet and sell the property, but they're really not making any cash flow either, and they do have to pay the expenses associated with owning a piece of real estate. But then you come along with your confident real estate swagger and your creative financing strategy, and you get them to agree to the following deal. You offer to rent the entire triplex for 5 years for the same amount the landlord's currently making from their one existing tenant. Or maybe in order to get them to agree to the whole deal, you offer 50% more than they're currently making from their one tenant. So if the tenant's paying $1,000 a month, you're offering $1,500 per month for each month of the next 5 years. For the landlord, maybe it's not a huge return, but it alleviates this headache of a property from being a concern of theirs for the next 5 years. And in exchange, they still get to keep the property. Plus, you're also obligating yourself to make immediate cosmetic repairs to the two vacant units. Because let's face it, in order to rent them out and make some money, you were going to have to do some work anyway. So now you're going to rip up those dilapidated carpets and put in some decent laminate flooring and put in a lot of sweat equity, spackling and painting both units. So between extensive sweat equity, maybe your out-of-pocket costs to do it all, let's say for the purposes of this example, you're spending $8,000. Now, the landlord still owns the property, so they're still responsible for the real estate taxes, the insurance, and any major capital repairs that happen to come along, like say a roof that's leaking and needs to be replaced, or the HVAC system completely breaking down or needing to be maintained. In exchange, you are also obligating yourself as the new overall tenant of the property to be responsible for anything that has to do with your subtenants, like vacancy costs and maintenance and management costs, and perhaps turnover costs with tenants that may need to vacate the unit and you have to go find a new one. So if the toilet backs up in the middle of the night, the tenant's not calling the owner of the property, they're calling you. Because your master lease gives you the right to sublease all 3 units to subtenants, once you fix up the 2 vacant units and get them rented for, let's say, $1,200 each, your gross rent collected would be $3,400, $1,000 from the prior tenant and $1,200 from each of the new tenants you brought in. If you set aside $500 per month for vacancy and maintenance expenses, and then deduct your $1,500 per month master lease rent, you'll be receiving a positive monthly cash flow of $1,400 per month, or $16,800 per year. And if you never raise the rents, that's $84,000 over the next 5 years. So you spent $8,000 to fix up the vacant units, plus we'll assume it took you 60 days to fix them up and get them rented, which meant you had to pay 2 months of rent on your master lease out of pocket, which was only $1,000 because you were collecting $1,000 per month from the existing tenant, and you only had to pay an extra $500 per month over that for your master lease payment, which means your total expense was $9,000 and you made $16,800 in year one for a cash on cash return of over 53.5%. After 5 years, you will have made your $9,000 investment back almost 10 times over. If you have bad credit or a bankruptcy or some other financial issue that would prevent a bank from giving you a traditional mortgage, then the master lease option is a phenomenal real estate investing option for you to utilize. It also gives you a 5 year period to rebuild your credit, your financial situation, and even save some money to go invest in a new deal with after the 5 year term. Or perhaps you were savvy enough to negotiate an option to buy into your initial master lease. The option to buy is a very important component of this entire investment strategy because an option to buy gives you the option, but not the obligation, to actually buy the property at the end of the 5 year term or at some period of time during that 5 years for a set determined price. Now, why would a landlord agree to that? If you choose not to elect the option, they're going to get back a fully rented, cash flowing triplex with 2 units that were recently renovated. So there is an option and a reason why they would agree to this. But that's not all. Let's say your option price is $225,000. You can sell your option contract to another real estate investor for perhaps $255,000, and then you walk away with an additional $30,000, and you still never have to own the property or spend more than the initial $9,000. If for some reason things went horribly wrong, you could walk away and you'd only be out of pocket $9,000. There's no foreclosure, there's no tax liens, there's no bankruptcy, just time, energy, and $9,000. That's your total loss. Now, let's say you don't even have the $9,000 to invest in the first place. Well, then you're going to need to combine this investment strategy with one of the other investment strategies that we've previously covered in a prior video. Like, say, for instance, the solo 401k or self-directed 401k loan from a family member, friend, or one of those real estate investors that you met at those meetups that I continually talk about every other video. I'm going to leave the link to that 401k investing video down below so you can watch that and get into the real nitty-gritty details of what it all entails. But essentially, if you know somebody who has a qualified account, they can lend you up to $50,000 at whatever interest rate you and they agree upon. And you have 5 years to pay the whole amount back, and you have to pay at least one payment of that principal and interest every 90 days until you've paid it back. But as you saw from our example, a $9,000 to $10,000 loan shouldn't really take you 5 years to pay back. As always, I caveat this with speak to your accountant and your financial advisor before you ever enter into such a transaction, because there are tax implications as well. Once again, I hope you got a lot out of this video because this is really a very unique and creative financing strategy to utilize that, as you see, has a huge upside and very little downside. If you haven't already, please hit the like button and consider subscribing if you haven't, because we are trying to put out a lot of great content, and the more we grow the channel, the easier it is for us to do that. We also have an Instagram page. I'll leave the link down below. There we're posting updates on future videos that are going to be launched on this channel, as well as some unique insights and interesting articles that are related to the things we discuss here on Confident Real Estate. Once again, I appreciate it and I thank you for your time. Until next time, I'm JC.